Thank you, Kavya. This has been fun so far. I mean, we've interacted with a lot of these startups so far, and seeing them come back here and share their refined pitches was good to see. So congratulations to all, and I'm quite sure the next 30 or 40 minutes are going to be a little nervous. So to keep your mind off it, what we have right now are some of the best names that we could get to talk to us mainly about investments and product development in blockchain. So primarily, I would first like to introduce our panel, and as I call out these names, if you could switch on your camera, that would be good. So first up, we have Mr. Remington Ong from Fenbushi Capital. Hey Remington, good to see you.
Hi, good to see you.
Jalak Jobanputra from Future Perfect Ventures. Hey Jalak, good to see you. Thank you so much for taking your time with us. And Nikoli Reinbold from CV Labs. And finally, our very own Nitin Sharma from First Principles Capital. This is great. Thank you everybody for joining. I know that we've kind of spilled over time a little bit, and what we will do is try to keep these questions as focused as possible. But quickly, as we get into this, your thoughts about the pitches that you heard today. What do you think was there? What do you think needs improvement? We could start with Remington. Do you want to go first?
Sure, thank you, Raghu. First of all, very impressive pitches from everyone today. I think that one thing that everybody has been doing well is identifying the pain points. I think there's this kind of tendency by some startups to maybe develop tech for tech's sake. So I think that starting from a pain point and identifying sort of what the best solution is to be able to address these pain points is something that a lot of the startups were able to say quite clearly today. I think one point of improvement for me is to sort of further emphasize the importance of blockchain as such a solution. I think that just first reactions, there is some of the pitches today I might have seen sort of solutions that may not necessarily require blockchain or decentralized solutions. So when you're pitching a blockchain-based solution, really kind of go into the meat of why blockchain or decentralization is a value add to this.
All right, that was insightful. Nitin, your thoughts?
No, I think I concur with Remington. I only attended a few in the last half an hour, and similar reaction, I think. And I would also push the startups to think a little more globally. I think it's absolutely important to develop use cases in India, the pain points, and that's part of this program. But one of the things that I love about the blockchain space is you can be global from day one. And so I would have probably loved to push the envelope a little bit more on that.
Right, that's a fair point. Jalak, over to you.
Yeah, I was impressed by what I saw. I also am encouraged, and this is really on a global scale, that we see entrepreneurs who have a lot of experience who are now applying that experience towards the blockchain sector. So that's very encouraging to see. One of the areas, and it kind of goes along with what some of the other panelists mentioned, is that the sector, I mean, Bitcoin's been around for 10 years now. We've seen several kind of cycles of innovation in the sector already. So having context of the competitive landscape on a global scale of companies that, and not only competitors, but potential partners, other companies that have been successful. So for example, in the supply chain space, there's a number of companies globally tackling the space, some of whom have gotten quite a bit of traction. So, and this is something, I see with startups everywhere, is just, because everyone's so focused on what they're doing, but taking a step back and seeing how it fits into the overall landscape and what other companies are doing in the space, I think is always helpful context to give.
Understood. And Nicolai, with your CV Labs hat on, what did you think?
Yeah, I mean, I agree on all the points the other said. And also, you know, on the pitch decks and so on, some pitch decks were quite a lot of words. You know, you cannot follow them because, you know, you need to read. You know, just keep it simple. Have some graphs, something like that. You know, you're speaking, you need to listen, then you need to read, and so on. It's quite complicated. That's what we say to our startups all the time, right? And yeah, try to stay on time as well on such pitches. But at the end, overall, it was quite nice. Quite some cool startups.
Got it. Got it. So I think there's a sense of resurgence and a focus traction with respect to blockchain companies that are going into the market right now. How different or difficult is fundraising? And I want to bring in Jalak and Nitin mainly on this, because you guys have seen fundraising from the outside for different kind of companies, and here you're also looking at a blockchain specific type of outlook as well. So Nitin, having seen both sides of the world, how similar or different is fundraising for a blockchain company, and has the history of blockchain companies in the past somehow made it difficult for them to raise funds, and especially in a country like India? Sure.
So I'll try to summarize this. So I think if you look at the from a VC perspective, if you look at companies in the permissioned or even public permissioned side of things, I think it's largely you're investing in the equity. And so I would say that it's not fundamentally a different analysis. Right. When you look at the public blockchain side of things, of course, the nice thing there is that there is the additional layer of tokenization, and there is sort of that liquidity aspect, which can seem very attractive to investors, right? So that has spawned a whole different universe of specialist funds and investors who focus on digital assets, for example. So I think my personal experience in the last few years looking at it is I think it's still maturing. It's still very, very young. And I think that a lot of more conventional professional investors have not come into the digital asset space yet. And that's a longer discussion, which we can have separately. I think with India specifically, since you asked, we definitely have been hurt by the regulatory environment until recently. So as far as the public blockchain side is concerned, I think there are very few examples of startups here who obviously had to go abroad and set up and raise money in some kind of an ICO or token offering. And there are some cases like that, but generally speaking, that activity has not taken off. And in fact, I think there's been a dearth of high quality projects as well. And as far as the more traditional equity investment by local VCs is concerned, I think that's also been hurt by the same regulatory overhang, right? So you still, my peers in the VC industry, there's just a minuscule number of enterprise blockchain investments that have happened so far. I am, however, hopeful that as the use cases mature and real revenue starts coming in, some of those Indian startups will start to look interesting.
Right. Jalak, same thoughts, or do you have a different perspective to this?
Yeah, I agree. I am actually seeing quite a bit of innovation in India on the digital asset side. On the crypto asset side. And we were early investors in Unicoin. They obviously had a tough few years with the regulatory environment. But what I saw is like a core group of companies and entrepreneurs who believed in the sector, who continued to innovate, who maybe were testing their products outside of India. So I am excited. I think what we've seen is that there's no one country that can really shut down the crypto assets. It's been tried in many places. I'm based in New York, and certainly, New York has had some regulatory scrutiny around the sector, but we're seeing that all of these jurisdictions are more and more open because they actually want to regulate, right? They would rather have it under an umbrella of regulation versus it happening outside of regulation. So that's my thought there. I'm actually very excited about India and the potential around crypto assets. On the enterprise side, look, we've seen very little true progress in terms of revenue generation worldwide on enterprise blockchains. I think there is a lot of potential. And I'm interested in what Remington also has to say, because I know China's doing a lot around enterprise blockchains, and I think that is one market to certainly watch to see what some of these applications are. I still believe in it. We have about like half our portfolio on the enterprise side and half on more of the public blockchain side. So we do believe in both, but I'd say the enterprise adoption has been slower, and part of it is because there's been a lot of legacy infrastructure that's been good enough. And once we see some scalability, some real use cases where people understand where blockchain tech is additive and is needed versus just pure cloud or other enterprise apps, we'll start to see progress.
Right. That's actually a really good summarization. Remington, I want to bring you in on this next question that we have, but essentially, you're still pretty active in the market, and you're one of the older funds as well. What does your meeting to investment ratio look like? That's the first thing. And are there any trends that you're seeing in the successes that you're looking at? Is there a blueprint that entrepreneurs can emulate?
Sure. I think from our perspective, the deal flow hasn't really slowed down, and in fact, sort of over this year, over COVID, it's continued to accelerate. I think that in terms of the funnel, the ratio. Sorry, 1 second here. In terms of the funnel and ratio, I mean, between our team, we probably easily go through. We receive inbound interest of maybe 500 plus projects a month. Between our team, we probably take about 30 meetings of those. So maybe 1 in 20 of them, we may actually take a meeting. Within that, maybe a 1 in 5 or so, we will go into more extensive DD, and among those 5, we may go into, we may actually invest in one or 2 of them. So it's kind of a very broad funnel, and there's a lot of kind of very interesting ideas in the space. But at the end of the day, sort of going into something that's investable, we go through a lot of criteria to sort of narrow down to the projects that we actually do invest in.
Right. Nitin, same case with you, just because I know that you get inundated with a lot of inbound queries as well, but wanted to know.
Yeah, I think it's about 1.6 some percent based on the last data I saw for us. But, and it's a mix of India and global. We have some investments in India, as being one of probably the only VCs to be actually spending quite a bit of time here on blockchain. So we do make an effort to meet every single team. And then some of it is abroad, where the projects may be anywhere in the world. Got it.
Nicolai, your comment on the way certain presentations were done, and the design and the way people and the time frame and things like that. That kind of leads me to my next question. What do you look for in a perfect pitch? If someone's kind of writing to you, whether on A, as an introductory email, what are you most likely to respond to? And B, when you are talking to them, face to face or by video now, what is it that makes a pitch stand out for you?
Yeah. So it quite differs what kind of stage they are, right? So for example, if you want to apply for the incubation program, you need to go over, I think, like 55 questions, and then you upload your deck and so on. So we're first going to go over that. Then in your deck, important is that you have the problem, the solution, the product, business model, competitor, market size, and so on. So like really clean, list all this stuff so we kind of see into it. And then, then we're going to invite them to just for an interview, right? It's actually quite not that lot that we invite. So we have, I don't know, I think last time it was like for the incubation, like 400, 500 applications, and we interviewed, so we funneled down to 30 startups, right? So important for us is, the team, the product, of course, is blockchain. You need blockchain. And yeah, So this kind of stuff, right?
Right.
Of course, yeah, because you know a product you can always pivot a bit. You know, you can work on the startup with them, especially with early stage startups. But you know, there needs to be some skills behind the team. And then, you know, for direct investments, we get quite a lot of emails. We then go over all of these emails, look into the product itself, which is quite important, right? And of course, the scalability. You know, just looking at the product, you know, it's a cool idea and so on, but you know, as Remington said, you know, it needs to be investable, right, at the end. Yeah, so this is quite important stuff that we look into.
Understood. Nitin, I know that you actually, most emails that come to you, you respond to them. But
really?
I mean, at least in my case, but is there a filter that you go through?
No, I try. I'm sure all of us are in the same boat. It's
Right.
email hell all the time. But no, I have no such filters. I mean, we have a very straightforward process. We combine them in one place and do weekly calls and look at everything.
Right.
Try to get back within 2 weeks.
Right, that makes sense. Let me just, this next question, maybe Jalak and Remington, you guys, I would love your insights on this. In the typical fund structure, is selling a blockchain only fund to an LP. Is that difficult even now? And, you know, or is it something that is working in your favor as you are structuring a typical vanilla VC fund? So Remington, as you've been around for a bit, and then Jalak as well, how much of a deterrent or an advantage is being blockchain focused from an LP standpoint? So Jalak, you want to go first?
Sure. So we launched our first fund in 2014 when very few, I'd say, LPs had heard about the sector, and it was a very tough sell. Now, we've always had a thesis around distributed connectivity. So I've been a VC since '99. I've been investing in the machine learning AI space, as well as the IoT space for most of that time. And so what I was looking at was the potential of blockchain technology plus some of these other emerging platform technologies that, and these are emerging just because we now have some of the underlying infrastructure like the faster processing power, the broadband connectivity, all these other things that actually allow new business models and new applications to emerge. So we always view blockchain as kind of enabling technology along lines of some of these other platform technologies. But because we started investing so early in the blockchain sector, about 70% of our portfolio is kind of pure play blockchain tech. And so it was a very tough sell 7 years ago, 6 years ago. We've raised 2 funds. We are soon to raise our 3rd, and it's gotten a lot easier in terms of the kind of story that's out there around this technology. I think a lot of people, a lot of LPs had associated the sector with Bitcoin and Mt. Gox and all the nefarious activity. The way I look at it is that's the way any new technology is kind of viewed in the early days, and having had that context and experience since the mid-90s, it was kind of one of the things that helps in bringing LPs along is just talking about the progression of technologies and new waves of technology, and how blockchain tech and more open source tech and distributed connectivity and decentralization moves towards where the world is moving. So I think it really helps to put it in context of technology development over the years. And yeah, it's a lot easier than it was 6 years ago to tell this story, but we're still in early days.
Right. Same with you, Remington?
So I think our experience mirrors Jalak's quite a bit. I think when we were raising our first fund, in 2014 and closing in our first fund in 2015, a lot of the story was around sort of explaining to investors what blockchain was and what decentralization means, and that it's not all about Mt. Gox and the Silk Road and all that. And I think that's back then we spent a lot of investment on educating these LPs as to sort of what exactly the future would look like. I think now the conversation has actually shifted to the other extreme, at least in our experience, in that sort of because Fenbushi, from the very beginning, we've been focused on sort of long-term ecosystem growth. And like Jalak said, it's still the early days. Even with a lot of enterprise blockchain startups, even those that are live in production and deployed, I think that having profitability is still ways away. So when we're going out to sort of raise a long-term early stage venture fund right now, we often get benchmarked against a number of, say, crypto hedge funds and maybe ICO funds from 2017. And people look at these like triple digit and in some cases even 4-digit IRRs, and they say, oh, is this what you're going to be able to deliver me? Why would you, like, how, why would you want the fund life to be 7+ years when these other vehicles I can exit in less than 2 years? So I think the effort continues to sort of educate the LPs on the long-term potential of this, but it's gotten a little bit easier to not have to re-educate LPs on what blockchain is these days.
Nitin, just to bring you in on the next question, what is the exit for a blockchain company today? And I'm quite sure that kind of factors into the investability angle that Nicolai was talking about. But what are some of these areas that you're looking at, and could you shed some light on that so entrepreneurs pitching to you could at least have that in mind?
So I think first thing on that, just as both Jalak and Remington said, I would say there are two types of investors in blockchain. There are people who are coming from a venture mindset and people who are coming from a trading mindset. For the venture-focused folks, I personally don't think that the exit is a valid question. I think when you're investing in the seed stage, there's far more important questions around what this company could become. And I think if companies succeed, exits take care of themselves. But specifically to answer your question, so M&A is still very nascent in the space. So I think most of the examples you see are, of course, tokenization and listing of these tokens and creating liquidity for the investors, right? And that's as I mentioned earlier, that actually is one of the most interesting aspects of investing in the space from a venture perspective, because you can get liquidity and much faster and actually be able to see multiple cycles, versus sort of that one liquidity event that typically happens. So if you're talking about enterprise startups and permission blockchains, there's no difference really. I would look at it exactly like I would look at a different venture investment. When it comes to things which lend themselves naturally to tokenization and could create digital assets and liquid, I think, of course, you look at the prospect of creating liquidity token generation in 2, 3, 4 years, hopefully not longer than that. And like I said, I think there are a few where you can see vibrant ecosystems and the tokens are working as with some utility and it's generating value for the network. And then honestly, for a lot of the others, it's still absolutely speculation. I think there's liquidity, but I don't think there's actual value creation.
Right. Just to put it out there, is that still a viable investment that you, as a from a first principle standpoint, look at, or is it?
No, I mean, we look at, I'm not a trader. I'm not a hedge fund trader. I'm a venture guy, done this for 12 years. So we will obviously look at liquid positions, but that's not the thesis mainly to go in. So it's nice to have that angle. It matters if you're in the space, of course, but that's not the first reason to go in.
Got it. Let's stick with you, Nitin, here, because you did allude to a point which I did want to ask questions about. The equity investments in blockchain in India in general aren't great. And, if you could allude, what are those things that are stopping it, or what's brought it to this state, and is it changing in the upcoming horizon? If you could shed some light on that.
Yeah, I think, we did a report 2 years ago and we presented it to the government. And I think at that point, about $2 billion of venture capital money, not ICOs, venture capital dollars had gone into blockchain in the world. And I think India was 5 million, 10 million. Like it was really, really huge. I don't think that number has changed a lot. And most of the investment is really just exchanges, right? So I think the answer is very simple. For things that have to do with crypto assets, whether it's the exchange layer or things which will be tokenized, I think the VC investors in India, first of all, there's a learning curve. I think you're talking to people here on this panel are specialists in digital assets. There is a learning curve. And I think most Indian VCs have not gone through that. It took me 7 to 9 months of learning to even start to understand. And I think and secondly, they're still cautious about what this would mean regulation-wise. And then if it doesn't involve digital assets, if it's straightforward enterprise software, I think like we it's still early. Revenue has not been seen. Examples like Figure in the US, Tassat, these kinds of companies which are helping take enterprises into the world, I think they're still not discovered much in India in the VC landscape. So we just need some time. And I think folks like, Remington and Nicolai and Jalak are creating some of those examples abroad, who hopefully will also help boost some.
Right. So far we've learned that the ecosystem is still maturing. They're still looking for successful spaces here. It is, it shows in how steep the, in discussions and outreach, inbounds to actual investment ratios look like. LPs are still coming around to it, and India again. It seems like a stage of it seems like a case of early days, but there are these success stories that are coming out. So with that in mind, the entrepreneurs today who are pitching, and they will be some of them may get funding, some of them may get go-to-market support. Some of them may actually get government customers, and these type of for entrepreneurs today who have just pitched. One final piece of advice that you would want them to have, and we'll go with Remington, Jalak, Nicolai, and we'll conclude with Nitin.
Sure. One piece of advice is just to execute, to prove your traction, to get your first user or your first 10 users. I think that ideas are a dime a dozen. You need to prove that you're able to execute and build a company to your vision.
Right. Jalak?
Yeah, I mean, I echo that. And I think, given the macro environment where we're in, it's certainly a tough one, but there is capital out there. There's been a lot of capital raised into funds that need to be deployed. So I think the companies that can show some traction, more than ever, are the ones that are going to succeed. And like India is, I've said this for a long time, India is the future, and remember that, and really, you have an opportunity to scale when you're in India in a way that you don't in most other markets. So if you can do that, it's I think you'll attract investors from all over the world.
Got it. Nicolai?
Yeah, I mean, I just can agree to both of the advices. I mean, showing traction helps a lot, and attract investors outside. We ourselves invested in one Indian company, but we actually didn't got so many applications from India. So we are totally open, and what we like to see, as Dada said, is traction. And building on it, and find really a use case for blockchain, and not just nice to have solution with blockchain.
Right. That's good to know, and I hope with this partnership with T-Block, maybe there could be that bridge that's built between these two things.
Hopefully.
Yeah.
Absolutely.
Right. And Nitin.
I think just 3 points come to mind. One, be patient. That all entrepreneurs have to be patient, but maybe a little more, especially if you're focused on customers in India. Second, as mentioned, do the work of clarifying the use cases. Either about, it really comes down to either automation or decentralization for me. And I think a lot of projects still don't do a good job of clarifying why blockchain is needed, and both to customers and investors. And last, yeah, I mean, look, I'm most excited about building in India for the global market. The success stories we've had with Juno or Nuo, Mudrex, etc., exactly that. Build the tooling, build the infrastructure, the software, SaaS for the crypto world, for the blockchain world from India. So I would encourage that thinking rather than focusing too narrowly on India.
Got it. Got it. Thank you so much, guys. This was the investor panel. Stay with us. We also have our protocol partners who will be joining us on the next panel. But Remington, Jalak, Nicolai, and Nitin, thank you so much for your insights. I'm sure the startups learned a lot from this.
Thank you.
Thanks for having us.
No worries. The pleasure is all ours.